EUR USD top down analysis. Let's break it down. All right, so for the monthly time frame, 100% bearish. We have this low right here. Price came down. These 1, 2, 3, 4 candles. This was the break right here. If you a little bit of conservative, you want to go to this candle, you can use this candle right here. All right, cool. That was some people say choke, some people say break of structure. That was the point where the market turned around from testing this previous area right here in 2020. All right, so that's what made it bearish on the monthly time frame. And to follow up with that, price came back up to test newfound resistance, and in the month of February, price came down to break. Well, it's not a break, but it's a bearish engulfing, and bearish engulfings are bearish, just like the name. All right. And then what we want to see on the lower time frame for these two candles is some type of break of support, like lower highs and lower lows, just to reiterate that the trend is going down. It's always important to understand what the higher time frame is doing. You really don't want to go against higher time frame volume. The monthly, I guess, is cool sometimes, even the weekly, but the daily, probably not so much. It takes a while for the monthly candles to close and to actually do what it's supposed to do. So I understand if you want to buy and sell on a monthly time frame, or even possibly the weekly time frame, but when it comes to the daily, definitely don't want to go against that daily volume. It's just easier to go with the trend, to be honest with you. All right, so let's go to the weekly time frame. Whew. All right, so the weekly is still bullish. This lower high right here was broken. Let me see, 1, 2, 3, 4 candles right here. That was that break. So on the lower time frames, we should see some type of break of resistance, come back down to test newfound support to shoot back up. Higher highs and lower lows, higher highs and lower lows on the lower time frame. That should be the ripple effect coming up to the weekly. All right, so now we're pretty much looking at, I'm not gonna lie, it doesn't look that good. It's kind of choppy right here. That's why I drew these trend lines. It looks like it may make one of those megaphone type patterns, but we just have to wait and see. Look like we got some gaps that need to be filled. But as far as directional bias, weekly time frame is still bullish on account of this. It's bullish until it's bearish, right? It won't be bearish unless it comes down and decides to break this low right here with something like this, right? That's what you want to see. You know what I mean? But until it does that, it's still bullish when it comes to the weekly time frame. All right. So let's move on to the daily. The daily time frame, I would still consider it bullish. You want to look at relative price, right? And right now, relative price is definitely bullish. If you want to go back and do some market structure, you can. That's where the arrows come into play. Let's just do major. You kind of see where the market is going, right? So as far as the daily is concerned, it won't be bearish until, let's see. It won't be bearish until it does something like this, because this is the relative low right here, and until it does that, you can't really consider it bearish. Now, in the lower time frames, you can definitely get into sales. If you see, an opportunity that presents itself, by all means. But as far as the daily is concerned, until it does that, as far as directional bias, it's still bullish. Right now, let me take some of this away because I get claustrophobic on these charts. Let me see. All right. All right, so current price definitely did one of these numbers, 1, 2. That's what you call a clean, nice clean little break with those two candles. I definitely capitalized off that last week. Yeah, no, that's a nice clean break. This gap still has to be filled. We don't know when it's going to be filled. It's just, I don't know, that if you trade gaps, I don't really trade gaps. Awareness is important for me. I'm strictly a price action trader. Price action, technical analysis, trend lines, Fibonacci, all that, but I don't really trade gaps. I'm aware of them to know that at some point in time the price has to come down and just close beyond that, or near that area. But you don't want to miss out on trades because you're waiting for a gap to close. Let's just say that it can close at any time. The higher, I do know this, the higher the time frame it is on, the longer it take to close. But yeah, so just be aware of that. Now let's see. It looks like it could be coming back a tad bit, and you never know. It could be because of the gap, or it's just retracing. So another thing I like to do is just pull out the fibs. Yeah, that was at 38.2. I'm getting a little carried away. As y'all can tell, I like marking up charts. Top-down analysis is normally just for the directional bias and kind of, for your awareness for the week. But this is kind of what I did for EU last week to kind of just get a good idea of where I thought the market could possibly go. This isn't a take profit. This is more as like a target zone. So I would get in and outer orders with this target in mind. You know what I mean? Not necessarily a take profit, because some people here take profit, they stay in that order for ever. You can't stay in that position for weeks. If you're swinging, cool, but if you're intraday, stay intraday. But yeah, this is where I think it's gonna go. But we'll just have to wait and see. Today is Sunday, man. Sunday. I'm not trading on a Sunday. Alright. But I digress. Daily time frame still bullish, right? Let's go to the H4. H4 is bullish, right? So this is just a minor, it's nothing, right? So if I go to the daily, you're not even going to really see it, right? It's nothing. So I would even just, I won't say disregard it, but it's important, but disregard it. You always want to make sure you're going to the higher time frame to kind of see how it affects the overall picture of where the market is going. So in my mind, H4 is still bullish until it comes down to this relative low thing and breaks this area right here with, you know, until it does one of those numbers. For me, it's still bullish, right? All I'm gonna do is pull out my fibs, point A to point B, kind of try to figure out where that next level of support is, where the market could potentially bounce off of. Ooh, I see a nice little wick action right here. Another thing you can do is go to your line chart. You can use the H4 or the daily. You take your horizontal line and you look for 2 touches. If you can find one. If you can't find one, cool, but if you can, it should look something like this. Right? Either a gap, so one on each side. This is your horizontal line. It should look like a gap, or it could be like a touch. Dang, I can't even touch it. See, the closer the better, because what that does is it kind of shows you an area where the market is just really a lot of indecision, you know. So let me see if I can find one real quick. Okay, I see one right here. What color it is? Purple. See these 2 right here? Let me circle it. Right there. Right there. Touch. And what you do is, to confirm it, all you do is go to back to your candlesticks, kind of just see how it matches up, right? You'll see price struggles at that area. That's not what I'm really looking for when it pertains to relative price right now, because that's below my 100%. But that's what it looks like. All right, I'm getting carried away. I'm starting to teach now, but all right, H4 bullish. Now, what I would do is wait for the market to do some type of transition, creating a higher low at one of these PRZ levels. Strongest PRZ level is 38.2%. When I say strong, it bounces off of it. It bounces off of it just very strongly. The steeper the retracement, the longer it will take to go back up. But yeah. Okay, that's about it for this one. I'm gonna go to either all USD or UJ next. All right, I'll see y'all on the next video.